Greetings, traders and investors. Welcome back to Ajayastromoneyguru, your hub for the latest insights and advanced analysis on various commodities. Today, on the 5th of April 2024, we delve into the dynamic world of sugar, exploring the factors influencing its market trends and price movements. Let's kickstart with the recent developments in ICE raw sugar futures. We witnessed a surge in prices as the Brazilian real gained strength, casting a shadow on Brazil's sugar exports, the powerhouse of global sugar trade. Brazil's dominance in sugar exports faces a challenge due to the real's ascent, prompting a ripple effect in the futures market. ICE sugar futures for May delivery climbed to 22.36 cents per pound, marking a 0.6% increase and reaching its peak since February's end. Now, let's shift our focus to the intricate dance between sugar and oil prices. The relentless surge in oil prices, fueled by escalating tensions in the Middle East, has raised concerns about the diversion of cane crushing for ethanol production, thereby tightening sugar supplies. With Brent crude prices soaring, the allure of ethanol production intensifies, potentially curbing sugar supplies and influencing market dynamics. In tandem, the May London ICE white sugar contract witnessed a notable rise, reaching $650.70 a metric ton, albeit off its recent high. As we navigate through these market fluctuations, it's crucial to examine regional sugar production trends. Thailand's sugar production from December to March exceeded expectations, with Vietnam's Office of the Cane and Sugar Board reporting a robust output of 8.75 million metric tons. Meanwhile, India's sugar production for the 2023-24 season witnessed a modest uptick, reaching 30.2 million metric tons by March. However, amidst these developments, Brazil remains a pivotal player in shaping global sugar dynamics. Brazil's sugar output surged in the first half of March, propelled by increased cane crushing for sugar production, although concerns loom over the sustainability of this trend. While early harvests may temporarily sway the market, analysts anticipate potential supply constraints in the coming months. In the realm of international trade, the U.S. sugar market witnessed a stir as producers advocated for reduced sugar imports from Mexico. The American Sugar Coalition's plea for a significant cut in Mexican sugar imports aims to bolster domestic prices amid logistical challenges, such as the recent port blockade in Baltimore. Additionally, Egypt's tender for raw cane sugar underscores the global demand dynamics, with market participants keenly monitoring supply chain disruptions and geopolitical tensions. Amidst these intricacies, the Commodity Futures Trading Commission data sheds light on speculators' cautious stance, evidenced by a reduction in net long positions in raw sugar. As we navigate through these multifaceted market forces, staying abreast of evolving trends and insights remains paramount for informed decision-making. That wraps up today's analysis, folks. Remember to like, share, and subscribe for more exclusive updates and in-depth analyses. Until next time, happy trading!